the situation over the next week, typically a lot of people would build this up, the Fed, the ECB, the BOJ. It's weeks like this where the central bankers need to make stuff boring and to remind people that they're not going to go at 100 miles an hour, to remind people that actually the ECB has been committed to a recovery ever since President Draghi got in the hot seat. Why is he going to put that at risk? Can he make Thursday boring?
I think he's going to make it boring, and in fact, our view is that there aren't, he may signal that a discussion on ending their QE program is imminent. It's not going to start in June. It's going to be more of a July event, and then they start to taper going into the third and fourth quarters and finish it, and then raise rates sometime in the second half of 2019. So I think he will. And with regard to our own Fed, I think what Ira Jersey said is right. Powell will, set the tone, and which he said before, is that we're going to maintain this gradual and deliberate pace. We're not concerned about a surge in inflation, which in our view signals that they're not going to be in a hurry to add a fourth rate hike if they ever do. If you look at the dots themselves, what they're saying, we're seven hikes into this cycle, halfway through, according to the dots. Market expectations show just 3 more hikes, which we are more in line with market expectations, and hence we think we're much closer to the neutral rate and the end of the tightening cycle.
Is that where you are, Jack? Closer to the neutral rate and closer to the end of the tightening cycle?
I think we got a little ways to go. And as far as the ECB, I actually would have thought that they were going to say the end of QE. They would have already announced it, except for the politics that have been around. So I think they're very, very sensitive to the markets and very, very sensitive to keeping it boring, as you said. But they do need to make these changes. They really do.
They've got to make changes, Peter, but what's the difference between dovish and hawkish at the ECB on Thursday? And when you sort of define it with numbers, is it just 30 billion? There's either going to be a hard stop in September, or they wind it down and the next month is 20 and the next month is 10. So it's an extra 30 billion of QE, which is basically an extra month of QE.
Or they could go and cut it down quarterly like we've done, right? We switched our tapering to quarterly. I think they're going to be very sensitive about what happened in Italy. At the same time, I do think they have to announce this and take this opportunity, right? The Italian bonds have, regained almost all their losses in most cases. So they've got a little window of opportunity, I think, to talk hawkish, because I think both us and the Fed, or both the ECB and the Fed, need to set the stage for being able to be dovish at some point in the future. We don't need to be dovish this month. Everything's still going fine in the global economy. So I think they can afford both to be a little bit hawkish, setting up for, easing in the future.